right, good morning, everybody. Hope you guys are doing well. Just double check some stuff. All right, so how's everybody doing today? We got a good amount of stuff to discuss, as always. All right, so yeah. Of course, as always, we're going to start with the news. Then, of course, we'll go to higher time frame, liquidity mapping, PD arrays, power 3, weekly, daily ranges, right? Specifically the weekly range, because that's just, that's what we focus on Sundays. All right, what's up, Tony? What's up, Mike? Appreciate y'all hopping on as always. And then, of course, we'll talk about validation, invalidation, and some other stuff that we generally talk about on Sundays, right? And this is a day where you can ask questions. You guys are very much focused on Sundays, so keep that in mind. Get the most out of it. You know what I mean? This is where your success for next week begins. Okay, so proper preparation prevents poor performance. Okay, so the better you can prepare, the more dynamic you'll be able to be. So yeah, and again, it's almost now 8 months straight of us being able to call bias and narrative using the same exact thing over and over and over. For me, it's been like 3.5 years at this point. Since I started my private group, basically us doing this in front of people, and specifically this year with YouTube, I've put a lot more attention on those of you that support the channel. And people like Tony, people like Nutty Fuffa, and newer students like Mike are seeing some great progress. And, funded accounts are being passed. And, you've seen me just absolutely slap the shit out of the market every single day. Sometimes there's times when it's a little shaky, which you guys got to see last week. But, sometimes that's going to happen, and you have to be prepared for it. And part of that has to do with your ability to trust what it is that you do. And the things that I do on Sundays, like I said, are very important for the success of your week. And it's also obviously important for your success overall and consistency, especially because our process is so repetitive. You know what I mean? So hopefully you guys have been able to see the value in that here on this in this community and on this channel. But yeah, so like I said, we're starting with the news as always. You want to think of power 3. If you think price is going to go higher, your expectation should be for price to drop down to some PD array, some liquidity pool going into Tuesday or Wednesday. And then from that point on, it should expand up until Thursday or Friday. Unless, of course, we consolidate, or if price is just going to kind of hang around and show us that it doesn't want to really do much, which could be the case. Last week there was some pretty crazy delivery, both to the sell side and buy side. I talked about buys and sells. I caught buys and sells on Thursday, and then Friday was a buy for the most part, aiming for the previous week's high in the indices. There was a couple of news events last week. On Tuesday, didn't really do much. Well, I can't really say it didn't do much. I kind of used that to decline for the NASDAQ. And then, of course, the red folder, the only red folder, was later in the week. So because that's the case, price used the start of the week to manipulate all the way up until we got to Thursday. And then the red folder came out, and then price shot up. It started shooting up on Wednesday, but then that continued throughout the rest of the week. Right? And of course, the bias and narrative has been consistent to the buy side, and there's been nothing telling us otherwise. And when we talk about the indices, we're going to highlight the 3 PDAs that I looked at and was telling you guys to focus on, and we're going to study how those levels held and why shorts were never fully in the cards. There was considerations for it because of the drop. There was a breaker that failed. But of course, 3 PDAs on that higher time frame daily and weekly chart were not violated. So as a result, we continue to see price going higher, which I think is going to be the case. But we'll talk about that a little bit further, later in the call this morning. All right. So again, the news that we have this week is going to be pretty busy. After this week, you should expect that things are going to slow down a bit. Maybe be a little bit harder to read, at least for this next week, not this week, but the next week. I mean, you could simply see that, there's not a lot of news. I believe Congress is on recess, so the decision makers for the economy, aside from the president and his cabinet, are on a vacation as if they deserve it, which does, they don't deserve to be off of, for weeks. Normal people can't be off for weeks, let alone people that run the country, so it's kind of dumb. But as a result, you can see that there's not much news. There's not many things to talk about next week. But for this coming week, right, we got Tuesday that has a red folder, consumer confidence. It could be pretty dynamic because this basically gives you insight aside from CPI, which is the consumer price index. It kind of gives you a feel for what people are thinking in the consumer market, which America's the largest consumer market. And then, of course, Sunday and Monday, there's no news. Okay, so when there's no news, you automatically think low probability. Doesn't mean that there won't be any moves. It just means that you automatically, because there's no news, lower your risk. How much you lower your risk is going to be determined by you. I give a default of cutting your risk to half of what your normal risk is. That's just me. But then you can also see there's some NFP stuff, some CPI stuff, and something that we've been waiting for is coming out as well, which is the federal fund rate. Because the rates have been so high, there's been a lack of buying overall for homes. That is impactful when it comes to the overall economy. It's a strong testament to what's happening, at least it's one indication for how things are going, right? Things are going good, right? They're getting better, but of course there's a lot of work to do for the U.S. economy to fix the problems that have been created from the last 4 years. But yeah, so it's going to be really important to see what they do. If they keep it the same, there's probably not going to be much of a reaction. Probably not much of a response, really. Then, of course, we got FOMC, we have NFP, we have PMI. So next week, there's going to be some serious fireworks. So you want to make sure you take it easy when you start the week, and then let these news events come out. Understand that there's news that's happening like this, like a bunch of news events in one day. So because there's a federal fund rate and an FOMC statement later on for Wednesday, we may see price hold, right? It may be kind of stagnant until it gets to that point, right? It doesn't mean that there won't be any moves. It just means that you better know what you're doing because it will hurt you, okay? But again, we got to think of power 3 when we start the week. So we'll get into more of the price delivery aspect of things in a little bit. But it's very important to spend time on this economic calendar because if you think about power 3, accumulation, manipulation, distribution, okay, that means at the start of the week should be accumulation, manipulation, okay, for the most part. Sometimes it takes off. But for the most part, you want to start every week with that understanding because then when the week starts and it goes against, say a bullish bias you have, you're not going to be swayed. You'll just be now looking for that to be the manipulation to reach for some form of a discount. What kind of discount, right? What levels are important? Well, the liquidity mapping ideas that I talk about are very important to think of when you're thinking of this, like what prices are reaching for. Then, of course, higher time frame PD arrays. What PD arrays below us that could be traded into as either a target early on in the week to navigate the manipulation, or a point in price where if it reaches down to it, that'll start the move. Okay, and then if that type of scenario takes place going into Tuesday or Wednesday, and there's a red folder, right? Say it reaches down to a daily fair value gap Sunday and Monday, and it hits that going into Tuesday or Wednesday, and you're bullish. Well, it's more than likely that area will be used to send price to the buy side, especially if the week starts aggressively in one direction. In this case, for a hypothetical example, being a daily fair value gap, daily order block, previous day's low, Friday's low, going into the start of the week, last week's low, right? Last month's low, like say there's a monthly low that's in close proximity to where we're at. That can also be used as opposing liquidity. Okay, just to pair us up with something that's going to send us higher, as long as you have a PD array that you're trading within, right? Highs and lows are PD arrays. Okay, but for the most part, we like to see either that engaged to then deliver, or a PD array like an order block, fair value gap, especially if there's been displacement that's been one-sided to end the week last week. And if it leaves a fair value gap, it's more than likely to try to weaponize that euphoria from the previous week and then completely reject, get people to think that it's going the other way, just for them to set smart money up at a discount to then go higher. And it's the same if you're bearish. Okay? So I want you guys to keep that in mind. Again, hopefully that highlights the importance of Power 3 on the weekly chart, aside from the daily and every other Power 3 perspective. The same thing can be true on the monthly candle, right? The monthly chart. All right, so it's one of those critical elements that you got to think about every month, every week, and every day. So a lot of times every session, and every quarter, right? Every 3 months, the same things take place, but just on a larger, more slow scale. All right, so yeah, do you guys have any questions about that? Let me go read your comments real quick. It's tough to call the market in front of people. Yeah, most people can't do it because they got egos in the way. I'm gonna get it wrong sometimes. Overall though, you've seen the whole entire year, we've been correct in our analysis month to month where price is going to go and where it should end up. So I do think that's going to continue. So we'll see, and if we get it wrong here and there to finish off the year, so be it. But we've been striking at high 80%, both bias and narrative wise, and then also execution wise, which I've proven now live, real time, not only here but daily in my private group, and then also through data in the Top Step account that I used as a challenge to showcase that rules can be followed and not stop you from having opportunity. It's silly they're not at school to have such long breaks. People, yeah, I agree, Mike. It doesn't make really any sense why they do what they do sometimes. Tony says, so it takes time for sentiment to play out. Yeah, it definitely takes time for sentiment to play out. And remember, we've been looking at the COT, right? Trying to identify, there's an offloading of buy positions. Trying to gauge when that takes place, obviously, is going to have to rely heavily on what price is doing in the moment. Like what price is doing on the chart. If the chart doesn't support something like seasonality or COT, that's telling you something. If it's a bearish seasonal tendency, or if there's a bearish COT idea taking place, and we're still going higher aggressively for weeks, that's just telling you that we are extremely interested in trying to push higher. And it's unwilling to really want to favor shorts because of whatever reason. There's multiple factors economically that could play a role in that going against fundamental analysis. And, when that happens, when a tool is not working or it doesn't seem like it's useful at the moment, you just put it aside. It's not nothing is a be-all, end-all. There's not just one concept that makes me effective or that will make you effective. It's multiple layered tools that are going to build you as a trader and allow you to see consistency and achieve the things you're trying to achieve. Mike said, how will he impact the by seasonality and start? I'm learning their rules are for a reason, and when you don't follow them, you lose. Yeah, and if you don't follow your rules, when you have rules, you're playing, like I said, by the market's rules. And do you think the market cares whether you want to succeed? Do you think it really cares that you have kids to feed? Do you think the market really gives a shit about you and your family? It doesn't. It's not here for us to succeed. So as a result of that, this is war. Okay, this is financial war. We're in a battlefield every single day. Not only the battlefield technically, but we're in a battlefield in our mind, trying to control our impulses and human nature that is intentionally weaponized by what they do and how the things are programmed in the market. They do things for a reason. Okay, stop punts are for a reason. Price stays in consolidation for a reason. So Mike also said a lot of retail people becoming bearish as we hit all-time highs, but is it a right approach? No, it's not it's not bearish. Nothing is bearish right now. We've had an assumption that there's a likelihood for it to potentially take place. We have to wait for our validation to kick in line with that, though. Otherwise, we're trying to pick tops like normal retail traders do, and you guys know the result of most people. They fail. So if we don't want to be like everybody else, we got to do things differently, and the way that we do things is absolutely diametrically opposed to what most people do. So you want to keep that in mind. But yeah, and if everybody's saying something, it's most likely not going to do that. If you see that the massive sentiment is bullish, or bearish, right? Price is more than likely to hold going against that longer than anyone would be willing to, or able to hold through that opposing direction being delivered. All right. So yeah. So yeah, hopefully you guys understand that. All right. Again, do you guys got any questions about any of the stuff we've talked about the news, how we look at the news, what our perspective is? Just a reminder too, if you guys support the channel, if you get value from what it is that we do here, definitely like the video. Don't forget to subscribe to the channel and pass the message along. Help me cultivate this community as one of the best communities on the planet, right? The most helpful, the most supportive, because that's what I've cultivated in my private group, and I'd be very grateful that you guys can help me do that here on YouTube. So yeah. See, there's no more questions. Okay, so again, part of the overall view, right? Like the overall checklist, you could say, for Sundays. Okay, you gotta look at the news, higher time frame analysis, risk on, risk off, basically the sentiment of the overall market, which is what we're gonna do by the end of this call, as we always do. Liquidity mapping, what liquidity pools are important, what near-term PD arrays are around us, close to price, not like way down here or way up here. What's in close proximity to us. Okay. Monthly, weekly, daily power 3. You want to keep that in mind, all the dynamics with that. Weekly, daily ranges, specifically the weekly ranges, and validation and invalidation for whatever ideas we're going to determine, right? like what's going to invalidate and what's going to validate for the week to go in whatever direction we're watching price to go in. All right, so that's like a very easy checklist. What I do here is not overly complex. I've learned so much over the last 6 years. Okay, and I've noticed that I had to go through a lot of the concepts, a lot of the content, in order to find myself. And it's going to probably be the same for you. You're going to hear a lot of things. You may see some stuff that makes more sense than others, some stuff that you're not going to use at all. Maybe you're more aggressive than I am. So maybe your risk model is going to be a little bit different. I do want to recommend that you guys go watch this if you haven't already. Oh dang, I'm up in like the top 5 search results. That's interesting. We're getting somewhere, yo. But yeah, so not this one. What the hell is it? Considerations in risk management. That's a great one to watch. This one specifically is what I was looking for. Okay, this here, he starts showing risk models, as you can see. Okay.
See what you get in terms of our time of the market day.
How to flatline equity drawdown.
Types of things, but
right, we talk about how to do that, right? In terms of dropping your risk, cutting your risk, dynamically managing things in that way. If you take a loss, drop your risk. That smooths out the times when you lose. But again, I'm going to encourage you guys to definitely go watch what he has to say there. It's 7 years ago, and out of millions of people, only 300,000 people have watched it. That's why a lot of people will lose. They're in here looking for order blocks only. They think that one thing is going to make them successful, when it's not. It's a multitude of different things, multiple different processes, okay, that overlap and create you as a trader. And part of that has to do with risk. So this here is a great one to watch. It'll help you create your risk management. I have a risk management video as well, so you can look on my channel for insights on that, right? But I'm taking you to the source of how I cultivated my own custom risk protocols and how I basically view risk management. And of course, it came from ICT and some of the different elements. So then I was able to form my own risk control that I like, that works for me. And some stuff's going to be different for you. That's why I'm telling you guys to go watch that video I just showed you. This one here, because he gives you multiple different ideas. So then you can start figuring out like what works for you risk-wise. Okay, and then this one too, up here. Where is it at? Considerations of risk management. Definitely watch that. More people watch that one than the other one for some reason. Yeah, those two will give you a very strong baseline for risk. And if you just listen to what I'm telling you every single week when I'm live or talking about risk management, you're getting a process given to you. If you take a loss, drop your risk until you make it back. What's the point in pushing to make it back right away? Again, that's playing by the market's rules. If you take a loss, you don't have to make it back. It's not mandatory. No one has a gun to your head that you have to make it back right now. The only thing making you feel that way is your expectation, your inability to sit through times when things may not go your way. And things won't go your way all the time. So you have to have a plan. Okay, and what's that plan? Right? Because that plan will save you. The only reason I'm where I'm at is because risk management and how organized I am. And the fact that I know, what price is doing. I have every corner of my overall analysis and understanding accounted for, which I try to share with you guys. Those of you in my private group see it on a daily basis. Like the market rarely gets away from us, and there's always something that's called out. Like, oh, this is going to go here and it goes there, or we got to wait. Like this week we had to wait. Mike, I believe, was on one of or on multiple of our calls this week, and he saw, similar to how Tony sees every week here on the YouTube family, and everybody else that hops on with me in my private group. There's no if this works out type of perspective, right? Or does this stuff work? Like, this stuff works, and I show it live. The only thing I don't show is my bank account, okay, which nobody's entitled to see, okay? Other than that, every single piece of evidence that allows you to trust a mentor or trust a concept is shown here and provided to you. And if you're in my private group, you get one-on-one type of lessons and access to have a mentor that truly cares and is willing to sit with you. Sometimes I watch videos that ICT teaches with my students. Sometimes a student has a sticking point but just can't describe what the sticking point is in a certain video or certain playlist I recommend them to watch. And, sometimes I sit with them, because that's what a mentor should do if they mean what they say in terms of caring about their students, and most don't, so again, that's something that separates us from the cesspool of idiots on social media trying to hawk a thing that they never even mastered themselves. Mike said risk and money management and following a plan is most important. Yes, it is. Because if you don't have risk control, right, if you don't know how to call where price is going, and if you're just not able to control yourself overall internally, that inner conversation, if any one of those elements, those pillars are broken or unmastered, like you don't have a mastery level or at least a good level of understanding of them, nothing will work. You can know every single concept in trading, and if you're not mastering these things, and you have one, it just takes one to be out of alignment. None of your technicals will matter, because if you get in and win, it's not going to matter because you're going to blow your account still, because you can't stop over trading and over leveraging or just managing risk properly. And if you can't get the technicals right and know where price is going and why, but you have good risk management, you have a better chance of still, getting some profitability, but it's going to be very limited if it's there at all. And if you can't manage your internal conversation, you're not going to be able to hold trades, you're not going to be able to trust things, and it just becomes a catastrophe. And it's a constant hamster wheel, So you can just see how those three elements are so important. Those three aspects drive pretty much everything as a trader. Technicals, risk control, and mindset management, which all three of them I talk about in great detail. How to deal with losses, how to manage the highs and lows. What should you do if you're on a win streak? If you win like 5-6 trades in a row, do you have a plan for that? Because when you're at that moment, that's max euphoria. So if you don't know how to manage that and cut it off and make it chill out and realize that you're just doing your job, and you don't let yourself get swayed. If you don't know how to manage that, you're going to overtrade, you're going to over leverage because you're too confident. And then of course on the flip side, if you're lacking confidence and if you don't have a plan to manage that as well, without being so overly emotional, you're going to get out of trades, you're going to hesitate, and things just become an issue, So I hope you guys listen to that and take it to heart, and realize that technicals are one thing, but there's other things too that you need to be working on. That's why this takes so long. That's why this is the most tedious, most difficult way to make easy money, because there's so many things that you have to be a master of. You have to be very well versed in many different elements, and nobody's going to be a, overall master of everything super quick, but eventually you can be, very effective at, most things. As long as you're doing things properly, as long as you have good advice, as long as you're around people that aren't influencing you to do a bunch of dumb shit, you'll be okay. Being here, you can rest assured that you're in a community like that, that's teaching you the right ways, that doesn't sugarcoat, that wants you to see the reality so you're ready for what the market's going to throw at you, and you can manage it properly without being overly discouraged. So Yeah, Mike basically made a testimony there. Said, yeah, I've seen very accurate reading of price, no FOMO, no chasing, just waiting for price to tell what it wants to do and precise execution. Yeah, Mike, I'm glad that you've been able to see that. I'm grateful that you put your trust in me as your mentor, and hopefully, you've gotten at least up to this point what you came for, and we have a long history hopefully ahead of us. So yeah, I'm grateful for the trust that you placed in me. Same with all of you guys, even those of you that are here on YouTube. I appreciate the time, because you guys could be anywhere else, like I always say, and you're here hanging out with me and some of these amazing students that have gravitated to us. So as always, thank you guys for the support. And yeah. So yeah, take the stuff I just mentioned to heart. Very important to set the stage for the week, set the stage for us going into a new month, which we are gonna do tomorrow or next week. We're gonna have beginning of the month scenario. So power 3 on the monthly chart basically states that there's consolidation manipulation for the first week generally, which is why the first week we have half risk always. Second and third week, depending on what's happening, can generally be the expansion phase of the monthly range. And then the third or the fourth week, sometimes the third week, if we hit a PD array that reverses, but generally the last week of the month likes to cap the monthly range, similar to how Thursday and Friday caps the weekly range, and similar to how later in the session towards PM session or London's close, depending on what asset you trade. Will generally cap the daily range in Power 3. Okay, so it's happening on every time frame. So that's why I mentioned certain things over and over. And I hope these things that I mention over and over, you guys are placing in your journal as specific studies. Daily and weekly ranges and monthly ranges should have their own section. You should put ranges, okay, or just Power 3 and have a category under it. Daily, weekly, monthly ranges within Power 3 concept. Okay. Again, if you guys aren't journaling at this point and you guys are just here hopping on, trying to find opportunities and just getting off the chart, you may be able to do that later on, okay, and kind of slack on it a little bit. It's recommended that you don't, because what you don't track, you can't improve. So, but eventually, you'll be able to kind of ease up, and it won't be as stressful to journal. And if you don't overtrade and over leverage, journaling can be fun. If you overtrade and over leverage, you'll never journal, because you have to journal every trade. And what is the logic behind that stuff when you're overtrading and taking too many opportunities? It just becomes more work, and it's already difficult enough for many people. So don't make it harder on yourself. I have a video about journaling too, for those of you that may not fully be equipped with what to journal, how to journal, stuff like that. Specifically at the end of the week or end of the day, end of the month. And then of course, even during each day, there's ways that you want to consider journaling. Everyone's going to journal differently based on what's important to you as a trader. So, don't let anybody sway you or steal that custom ability we're given as ICT traders. Don't ever let that get stolen from you. It doesn't matter if it's me, it doesn't matter if it's someone else. You want to make sure that you always understand this is a personal endeavor, and you want to make sure that you really, really lean into that. But of course, that only becomes comfortable after you spend some time gaining experience with the concepts. And hopefully this stuff will we do Sundays and every day for my private group students, and then for you guys on Tuesdays. Hopefully you guys can see how you should be going about journaling. Right, so let's get started with kind of identifying what's here. So if we look at the quarterly chart, I mapped out for the yields. Okay, we got a quarterly bullish order block. Price ran up above it in the last quarter. And now in this current quarter, we're resting above this area. Okay, we have this wick. It hasn't been traded through, but we still can break it down into quadrants. We have a middle portion right here. Right, price is kind of hovering below that. If we kind of look at the other ones as well, we could see that they're range bound, right? It's been range bound since 2023 of October from a quarterly perspective. So it's kind of been, a little shaky. It hasn't really been too interested in doing much. But we'll see if that changes this year, given the supply side stimulus that we're getting in the U.S. economy, along with the chance for interest rates to be impacted in terms of cutting, because of the success the U.S. economy has been seeing the last 7 months, maybe like 5 months. Right, things take time when it comes to policy. Some stuff could be more dramatic than others, but yeah. So we got to keep tabs on this quarterly bullish order block. I'm going to drag that out further so we have it as a reference. So we got the quarterly high here, and we got a quarterly low. We got the current quarterly high and low. Okay, so these are 3 months. That's what the quarterly perspective is. So we're inside of this previous quarter's range. So if it's going to go higher long term quarterly, it's going to have to break through this. Right. Same with this over here. Right. We have a quarterly high here, quarterly low. It took out the previous quarter's low, and then now we're kind of trading within this. So if it's going to continue going higher, which would support downside indices eventually, then it's going to have to eventually break through this. This is on a 3-month basis. Each of these candles takes 3 months to print. So this is not by any means something that we're going to use on a daily basis, but it's good to, when we're going into a new month, you want to look, or a new quarter, you want to make sure that you understand where we're at. Like what could possibly be important around this quarterly time frame. The only thing that I can see personally is the high up here and the current candle's liquidity, the low here and the high here. Okay, we're trading inside the range on pretty much every one of, all three of the perspectives, 5, 10, 30-year yields. Again, this dictates what, or influences pretty heavily what the DXY is going to do. So if this is running higher, DXY is most likely going to favor going higher if it agrees in the chart for DXY. And of course, that could be also complemented if it's going to go higher with a lower bond market, which on the flip side impacts what the overall foreign currencies are going to do, what the indices are going to do, so on and so forth. Okay, so let me clean this up a little bit. But yeah, so with that being said, you want to make sure you mark off the high and low that's most relevant. In this case, it's the previous candle's high and low, the previous range, and the order block, right? These are the only two things that I see that are important in this 30-year chart. Okay, so we're going to watch that. And yeah, so let's move down to the monthly chart. Zoom that up real quick. So we got the quarterly perspective and we got a quarterly PD array. So now we also have a monthly bullish order block. Okay, so the monthly bullish order block is there. It's a little bit more sloppy in these other charts. 10-year and 5-year a little more sloppy. So we'll go more off of what the 10-year is going to do here. You want to be very, very attentive to identifying SMT. Like for example, I see that this candle here has a higher high, while these have lower highs. Right, so we got to keep that in mind. Overall, it's not too dramatic. It just looks like it swept it. But if we were to see price displace and say get down below this monthly inversion fair value gap potentially, this one too, right? We have this as well. If we lose this low, along with these levels down here, the order block, the fair value gap, and the inversion fair value gap here too. So 2 inversions, a swing low, and the order block here. So on this monthly chart, if we're going to look to be bearish, 3 PD arrays would have to be violated for me to support the fact that long term we're now going to be bearish over bullish. So I would have to see price get all the way down to something like this and sweep that out. I would say that if we closed down into this, and start using the quadrants inside this monthly inversion as resistance, say it just, traded up and then has always continued to go lower, purging out more lows, then we could start to make the argument a little bit sooner But again, up in here, there's nothing telling us that we're going to be bearish. So it seems as though they're going to continue to be racing for the buy side still. Not only that, if you look at the low here and you compare it to this low, right, you got to see if there's SMT. There's not really any SMT. Go to the 2-month chart. Let's kind of zoom out and see. So this low, and that low. Slow and that low. See, it's pretty in alignment, right? There's no real SMT that we can identify there. So that's not really worth putting too much weight on. But again, on this monthly chart, just like how we did on the quarterly perspective, the 3-month chart, you want to make sure you identify the most recent high and low and the previous high and low relative to this time frame. You know, since it's the monthly, since it's the quarterly time frames, the previous candle and the current candle are the most significant things you could be observing as a day trader or a swing trader, or you know, whatever style you're using aside from position trading. You know, so if we see this current monthly high, current monthly low, that needs to be identified. Okay, so we'll put the monthly high. Then we got the monthly low. So we've blown out both the high and low from the previous month. So both sides have been engaged. All right, so let me throw this up there. Okay, and then we got the monthly order block, and then we got the 50% level. Okay. So price is going to go higher. Say it's going to attack these relative equal highs, which could be the case eventually, right? And then that would, again, influence the DXY to go higher. If we were to want to reach up into there, we still have to break through this first. So what's more reasonable on a daily basis to target, or on a weekly basis to target? If we do think it's going to reach up into the buy side up here, the monthly high, or monthly equal highs, what can we do to position in line with that as price reaches up into it without solely needing this to be our draw on liquidity? Because it can do a lot of stuff as it gets up into there. So if this is all we're basing our opinion on a daily basis, we have the narrative as long as it stays in alignment. But bias is going to have to be navigated. So how will we do bias on a daily basis? Well, we could use near-term levels like this, right? This is probably more of a weekly high. It's a monthly high from this perspective, but if you go to the weekly chart, I'm sure it's a previous week's high. Okay, but just for simplicity's sake, we can mark this as the monthly high. But if it's going to go up there, and this is where we're going to reach for, this is going to have to be breached. I would hope you guys would agree with that. Right, it's the same thing with the daily candles too. Right, the previous daily candle, if we're going higher, right, and there's a high that we close below from the previous day, it's going to have to break through that previous day's high if it's going to continue, because candles print right next to each other. So the most near-term liquidity is not going to be this one. It's not going to be down here. It's going to be each individual candle high and low, depending on what you think the narrative is. In this case, we're still supportive of price going higher until it breaks down below a level like this, unless it breaks down below a level like this, or if it breaks down through a level like this. Okay? So does that make sense? Let me know in the chat. Mike said thank you. I appreciate you as well, brother. Thank you too for being such a good student, willing to learn. Because it's really important. That's why I'm here. I'm here for people that want to ask questions, that want to learn. I'm here to teach and share what's helped me, so that maybe, just maybe, I could have helped some people, and I've been able to help a lot more than I even anticipated I would ever be able to help. I've helped multiple people quit their jobs. I've helped multiple people build strong portfolios long term. I'm not a financial advisor and I don't give financial advice, but you know, this stuff works, you know. So yeah. Right, 95 I said it makes sense. All right. All right, so I'll assume that it makes sense for everybody. Nutty Fafa. I'm gonna assume that you're speaking for everybody. So yeah. So once we finish this, right, we look for the current and previous high and low, or the closest high and low. It could be a monthly high and low, weekly high and low, daily high and low, session high and low, whatever the case may be. In this case, obviously, it's the higher time frame highs and lows. And then close proximity PD arrays. Okay, so we got the quarterly order block. We have the quarterly high. We have the monthly order block here. And then we have the monthly high and low. Okay, so if it's going to go lower, it's going to still have to break through this. And that could be tradable depending on what happens in the moment, what news is happening, what does the weekly range look like as it looks to reach down into that level. So yeah, and then same thing goes for the high up here as well. So close proximity PD arrays, close proximity high and low. Those are going to be our most near-term liquidity pools. And then you can get obviously more detailed as we go lower using our liquidity mapping principles, which is in my free Discord. It's listed, right, what liquidity you should focus on. And then, of course, it's in my private group every week as well. Okay, we talk about it regularly on live calls too, which levels are important and why. But yes, so if that makes sense, that's pretty much all you need to do for these higher time frames, right? We're on this monthly. Now we'll drop down to the weekly. Okay, so now we got a pretty solid baseline as far as what we think price should reach for or what levels are important. Okay. Let me actually make this a solid line. I don't like the dashed for some reason. All right, so since we have that, right, now we got a little bit more to work with. Okay, so now if we zoom in a little bit, see, this here was a previous week's high, right? So if we drop down a little bit further, you could see that that was a previous week's high. And that week is the current monthly high, right? And then, of course, you could see this is a previous week's low, but it's also the current monthly low. If we look at June, which is when we're in July. So if we look at July, okay, price basically whipped lower to start the quarter, right back in June, and then that low was set inside the monthly fair value gap. It tapped right into it, the inversion, and then price has shifted market structure, created the YouTube model buy side position to go higher on this higher time frame. And you can see that the delivery off the quarterly power 3, the start of the quarter, declined. Set a low, hit a PD array that was below us, displaced shifted market structure within the first 20 days of the new quarter. And then it set up the buy and price has been going higher. Now again, unless something is dramatically changed, we'll continue to watch price or anticipate price going higher. Okay, so let's actually move back real quick. So again, like I said, we got the monthly high and low, quarterly high and low, monthly PD arrays that's in close proximity, and the monthly liquidity in terms of highs and lows that are there as well, right? So we got very strong levels that are going to be important to us. We can now also look on this weekly chart and see that there's this wick, right? The quadrants within this wick, so that's another level of liquidity to watch. We could see how the middle portion, or not the middle, but the quarter portion of the wick has basically been respected, right? So that rejection, we got to make sure we keep tabs on that, because if it was to break down below this low off the heels of that rejection, that would be early signs that price is potentially going to start being interested in declining and dropping down to target these lows potentially. Mike said, thank you. Makes sense. I got to go. Oh, okay. All right, for sure, Mike. Appreciate you hopping on as always, brother. God bless, and hope you have a good rest of your day. I'll talk to you soon in the private group. Let me know if you have any questions. But yeah, so again, if we look at things from this perspective, like I said, you want to keep tabs on this. It should not be able to break down below this level down here. If we look at this area in price, we have a fair value gap. We have an order block here, which is also reactive from the quarterly order block, right? So it's overlapping. And then we have this swing low. So again, on this weekly time frame, from a weekly perspective, if we were to break down below this low, how many PD arrays is that? We also have this wick. So the wick center point, the order block, and this fair value gap. Those are 3 PD arrays. And then we have this other previous weekly inversion fair value gap too, right? To keep tabs on. And then of course, this here is the monthly order block, middle portion of the bullish order block on that monthly chart. So again, if it was to break down below this low down here and violate these levels, turn them into inversions, there's no reason to try to force buys, whether this is the bonds and yields, or if it's the currencies and DXY, or if it's the indices. It's all the same stuff, the same principles. Okay, if you saw this happening and this was the NASDAQ, I'd be saying the same thing, identifying the same levels, thinking about validation and validation in the same way. All right. So going into this new week, going into this new month as well, I wouldn't be surprised if we hang out or decline a little bit further for power of 3. But I would demand that we stay above this. Okay. These are consecutive down candles too. If we go to the 2-week chart, we have an order block there. It's kind of in line with the middle portion of the weekly inversion fair value gap here. Let me see real quick. Yeah, so see the inversion here? So again, as long as we stay above these levels, our opinion is going to remain the same. It's going to continue to push higher. We have to allocate the flexibility to be able to look at the other side. You can't be one-sided solely. You have to have a process that you could be that you could use to be flexible, because sometimes you're going to get it wrong. Okay, you're not going to be perfect. I'm not perfect. 80% strike rate and accuracy rate in terms of bias and narrative. Bias and narrative on the higher time frame has pretty solidly 100% of the time been correct. And you don't have to take my word for it. You just go back and look at stuff and ask some of the students here in my group, in the private group, or here even on YouTube. And bias and narrative on the higher time frame, we've been 100%. Executions, though, there's been some losses. It's the way it is. We called the yearly power 3. I called the yearly low this year at the yearly bullish order block that price declined into back in March or February or March. And then, we got in line with the continued buy side ever since, creating the market maker buy model in the indices, right? But yeah, so unless this changes, right, unless we break down below these levels, we're going to continue to want to see price go higher. Okay, we got this area in here and these levels in here that we're going to watch to justify that opinion. As long as we stay above these levels, if it breaks above this and gets outside this weekly fair value gap, we have a pretty solid, potentially easy ride to then try to target the buy side. And if you zoom out in here, we got zoom in, right? We got equal highs up here. It has swept the high up there. Same thing applies here as well. We have a fair value gap. We have an inversion fair value gap potentially. So if it stays below that, if we leave these upper levels and we displace below this order block and we sweep out this low, we got 1, 2, 3 PD arrays getting violated, and that would turn our attention down to attacking things like this, possibly even things like this, and maybe even filling in the rest of this fair value gap that we see down here. For this weekly perspective. All right, so that in a nutshell is what my opinion is here on the yields. We will continue to want to see price go higher until proven otherwise. And those levels I mentioned that, if they were to get violated, that would be when we would then turn our attention to the opposing view. Okay, so again, if that other asset, the yields, is going to try to go higher, then we should continue, in this case, to see this bond market do the opposite. Okay, so it should go lower. All right, so we're inside this this monthly bearish order block. Let's go to the quarterly. Bearish order block here on the quarterly perspective. Okay, so it's a quarterly bearish order block. We got the midpoint of that, and we have a swing high there too. Okay, I'm not too sure what the hell that line is starting the new quarter. All right, notice how the start of the quarter rallied up, right? And then now it's just continued to decline, supporting the continued downside delivery. So again, that's going to continue until something changes. On a quarterly basis, overall, it's going to have to break above this if we're going to see some like very long-term buy-side delivery. Obviously, there's ways that we can get in line with the early signs, right? But from this perspective, again, let's talk about what's important, right now. Every time you look at a higher time frame perspective, you got to think, what's the current high and low and previous candles high and low? Okay, we got the quarterly low down here. I'm going to use orange from now on for a quarterly perspective. Yeah, I think I like orange better. So I got pink for monthly. All right, so yeah, let me drag that out. So this is the previous quarterly low. We got the current quarterly low. And then we got the quarterly bearish order block too to watch, okay? So as long as this continues and we stay below this order block, stay below this order block, stay below this high, the quadrants inside the wick at this high. On a quarterly basis, long term, we're still interested in going lower. Okay, we still have liquidity down here. We have this liquidity. And then, of course, if it gets real excited for, a couple months further or a couple quarters, later into the year, we may end up targeting the low down here. Unless something changes, nothing changes. Okay, so this is the landscape of the quarterly perspective. Go to the monthly chart, we do the same thing, right? We're going to pull up the monthly high and low. Let me actually kind of get rid of some of this. I'll keep the weekly bearish order block. All right, and then we got the monthly inversion fair value gap here. Look at how that's been beautifully respected. So yeah, it's continuing to hold this level in there. We have a monthly the hell is that monthly fair value gap? Okay. Actually got something else we can identify in here too. If we go from this high up here down to the low of the the low of the fair value gap. This range has both sides traded into it, right? So you could see the middle portion of that in balanced price range. Right, we see that the middle portion has been significant. Not too sure why it doesn't want to let me. Oh, whoops. Porter. Yeah, so you could see how that was used. And the monthly order block has also been used. And it's held and it's pushed price lower. So again, if this continues and holds like this, what is in here telling you that buys are going to be more favorable than shorts? There's nothing, unless it breaks above and starts closing above a lot of the important levels that we're talking about in here. Okay. So we'll stick to the 30 year, right? You can go back and, if you want to be more complete, you can go identify things on this, the other time frames, the 5 and 10 year. I got to leave you some stuff to do, right? But yeah, as long as things continue to hold like this, and as long as the yields continue to go higher, this is supportive of the indices and things starting to slow up the run to the buy side, and the DXY should continue to hopefully support continued buy side. And if not, again, we set these assets aside when they're not correlating or being helpful. And in the moment, you could go on the lower time frames and use this stuff to also qualify or continue to confirm a particular move taking place within the management of a trade on the indices. Okay, so if you're executing on the 30-second chart and you go to the 5-minute and the bonds are going higher, right, on that 5-minute, and you're looking for a buy on the indices, that can be helpful if there's a reason to buy on the indices. And then, of course, the opposite's true for shorts. But again, just getting back to some of the important levels and how you calibrate yourself, you got to, of course, just like we did on the quarterly chart, you got to also look at the monthly high and low, right? The current monthly high and low. So we got the monthly low here, which again is the quarterly low for the current quarter. And then we got the monthly high up here. Okay, so we got monthly high, monthly low mapped. And then where's a liquidity pool or PD array or whatever that's in close proximity? The inversion fair value gap here, and we got this monthly bearish order block. It's also a quarterly order block, so I'll just leave that there and not have to really put the monthly because it's pretty much in alignment. Okay, so that's pretty nice, right? And if we close below this order block, it should be able to be used to continue the run towards the quarterly low down here. Okay, so that in a nutshell is what's relevant from that perspective. And if we zoom in a little bit, we got the 20, 40, 60th day IPTA data ranges. Okay, so we're monitoring possible shifts in market structure within the 20th and 60th day. And, we may have seen that here to then start to continue to shift. I know that on the daily chart, we did see this quarterly shift in here, right? Right after we breached the 20th day going into the, 40th up to the 60th, we see a huge shift in market structure there that led to price going lower. Okay, so again, we want to make sure that we're watching the 3 PD arrays above us. Okay, so if we map out the high of the fair value gap there, and we got this fair value gap here. Okay, weekly fair value gap. Okay. So if we look at this from this perspective, right, if we want to see this continue going lower, opposed to what the yields are doing, we're going to have to stay below this level, right? So there's one PD array. So there's one PD array in here. There's a couple volume imbalances. So, I guess you could use that as a third and a fourth PD array, or a second and third. And then we have the wick and the middle portion up there. And then, of course, the monthly fair value gap. So if it was to get up here, there'd be no reason for us to continue to slam home the overall interest to go lower. It would then be finally getting back in line with price potentially going higher. I do see something that is pretty significant in here. I do see that there is this weekly SMT here. So again, that would be fairly supportive if this holds and we do end up breaking above some of these levels to the buy side. That would be very supportive of this going higher. And again, that would then support continued buy side in the stuff that we're seeing in the indices. It would continue to support that directional idea. Okay, and this is a weekly perspective. So, there's a previous week's high that was taken, and then we got the PD array, but then we also have a weekly high up here. Okay, so if it is going to go higher, or if we're trying to frame something on the lower time frame, and we are, maybe it closes above this weekly fair value gap, or just refuses to go lower, then of course this would be in our crosshairs for targeting. Okay, so we'll keep that in mind for the weekly high. It's a previous weekly high from 2 weeks ago. So if we're trying to frame out an idea, even if it does choose to support price going higher, we're still going to be able to target something near term, which is the previous candles. This shows you the importance of what we talk about here about liquidity and how to identify it, aside from the liquidity mapping. I guess it's kind of in alignment with that. Current and previous weekly highs and lows. The ones that are in close proximity are very important. I can say that if we reject from this weekly fair value gap and it gets below that, we'll start to do the same thing, but to the opposing side, right? We'll target this weekly low. The wick and all the quadrants can be used as day trading targets. And then we also have the low down here, and then these as well, which eventually gets us to the quarterly low, and then maybe even all the way down to this one as well, if it gets excited and wants to drop. I'm not sure what the rate cuts are going to do to the bonds and yields. I'm not 100% sure what a cut would do for these. I know that it would potentially be positive for businesses and just overall economic growth and home sales and whatnot. So that could potentially be a positive thing for the stock market. And if it's a positive thing for the stock market, I'm assuming that the cut would then cut the bond market and drop the overall delivery, or it would make this rally if the stock market's going to go higher, because that's supportive of buy side delivery if it goes higher, right? So a positive impact would, at least from what I think about, would have to result in this going higher. We'll see, right? We'll see what a rate cut does, and if it doesn't get cut on the 30th in a couple of days, in terms of the interest rates, things will probably be the same and nothing significant will change. It'll probably just continue to gravitate to the sell side. It does seem as though they've been accumulating inside this quarterly wick, which is also below this low here, which is the yearly low, right? This is the yearly low, which I didn't notice that, but this, I guess, is the yearly low from January of this year. So that's pretty interesting. Right? So it's accumulated. How do I know it's accumulating? Because it's consolidating after it purged this liquidity. Right? So again, we may be setting up for price to go higher. We have SMT. But again, we need to see these levels get invalidated for us to then really get behind the bonds going higher. Again, that would support the indices continuing their rampage to the buy side. So we have no problems with it doing that. And then we got the weekly high and these other levels to frame out as well. You could see that the low, I called this as well, the low, high, lower low, fair value gap, order block, and the wick. Notice how the middle portion of this wick was respected. All inside this price delivery, I remained bearish, and I called it before the fact, in the moment, real time. So you can go back to April and see some of the live calls I talked about this. I talked about it live in some of the live calls. So definitely go do that if you haven't already. Lots of stuff we discussed in April. There's a lot of stuff we discuss all the time. So it is what it is. Anything that you watch when it comes to my content is going to be valuable to you. And if you have questions and you get confused, you just simply got to ask, and I'll help you out. But if you don't ask and you don't try to get these things solved, you only have you to blame in terms of you struggling. Because you come here, my objective is to get you from confusion to clarity and get you organized, ready to call bias and narrative, and then share some things about the other intricate details that get you to having the chance to be profitable. I can't guarantee profitability, but you could put two and two together, seeing the performance I show and my students, and make a determination whether there's useful stuff here, which I can go out on a limb and say there is. Okay. But yes, so does everything make sense in terms of what we talked about with this asset, with the yields? Because once we finish this, we will then move on to some of the more exciting stuff for some of you, the DXY currencies, for my Forex traders, which I do have, and my absolutely amazing indices traders. So yeah, let me know in the chat if everything makes sense so far, and then we will happily move on. Again, don't forget to like the video, subscribe to the channel if you get value from the content. It's much appreciated. It does a lot in terms of helping me get in front of people just like you that I can help, because that's why I have this YouTube channel anyway. I don't just like to hear myself talk. I'm here to help and provide value, which I hope you guys have been getting. Okay, yeah, Tony said makes sense. 95 makes sense. Okay, beautiful. All right, so yeah, with that being said, if we look at the daily chart real quick, we got these levels in here, but more significantly, something that'll change the overall delivery in a significant way will come from the monthly and weekly charts and the stuff that we talked about on that perspective. We may see early signs in here, right? This shift in market structure, run-on stops with SMT. If it does close above some of those levels, we can then start to make an argument that maybe this high to that low will be a balanced price range. This high to that low may create a bullish order block. This high to that low may also create a bullish breaker, with an SMT on the higher time frame if it gets above these levels up here. Okay, so you can start to see how the higher time frame down to this time frame can be used in terms of context to then justify potential moves or structural changes taking place or confirmations taking place on the daily chart. All right, so hopefully you've been able to see clearly from the last couple months, but then also with what we've just talked about, going from one quarterly, monthly, weekly chart down to the daily chart, and you can see the importance of that sequence in the process there and what's important. Hopefully I've been able to calibrate your guys' thinking properly, so then you aren't as confused and can start working towards clarity, because at least for me, and hopefully for you guys too, from today, hopefully it's very clear. Some of you guys have told me that it is clear, makes sense. So hopefully that's the feeling with most of you guys. All right. So yeah, unless things change, nothing changes. And on this daily chart, if we were to break down below this low, displace and overlap this fair value gap, overlap this, which is also a weekly fair value gap, use it as resistance. If we break down below this low and we retrace into it and it rejects from that and then goes lower, then that'll be pretty significant, because this is also a bearish order block. These up candles, for now, it's still a bearish order block. All right, see that in here? It's a 2-day, but I just say it's a daily. Keep it easy, right? And again, if it was to trade above that, that will be basically breaking the order block. Order blocks are balanced price ranges. If balanced price ranges are broken aggressively, opposed to what your assumption is, like in this case, it'd be bearish. If it breaks through that, it's basically showing you a balanced price range is being violated that should have held to continue pushing price lower order flow wise. And you could then start to justify some of the other things that change the state of delivery. Overall, 3 PD arrays being violated, the SMT, so on and so forth. Okay, so until that's proven, we're going to continue to watch this order block hold. This is a order block 50% level. Maybe I can make that a dashed line just to make it clear. Okay, and then of course we're inside this weekly fair value gap as well. Here. Okay. So yeah, that's my opinion. Lower bonds unless it breaks above these levels. Higher yields unless it's proven otherwise, which we may be seeing the early signs of, but we don't pick a top, we don't pick a bottom, so we got to wait. Okay, but that's the sentiment for these assets here. And we will now move on to the currencies. With that sentiment in mind, I mean, it makes sense that this decline took place. We'll see if this order block here wants to hold. It's not necessarily closing below it, so it's not as significant, but we'll see what happens. Okay, for this asset, we'll just stick to like the monthly, weekly, daily. Okay, so again, if we look at the monthly chart, you got the monthly high, monthly low. You got previous month's high and previous month's low. You see how that liquidity was used before anything else? Right? Going into this new month, what did it do? It manipulated above what? It manipulated above the high, which is a previous monthly high, took that liquidity as the opposing liquidity, and they paired that liquidity with this decline after we've been bullish to the max for what, 1, 2, 3, 4, 5 straight months. This was also a market maker buy model, which we talked about and navigated down and up. So every asset we analyze has been correct in terms of our analysis. It's not just one asset. We've been able to call every asset. Okay, and it's some things have been cracked in correlation, but even in the crack in correlation, we've still been able to stay calibrated because we know what the hell we're doing. And what we do is reliable. We don't need everything to be in alignment, but the more things that are in alignment, intermarket relationship wise, it becomes very helpful. And hopefully that's very obvious and a very useful thing to you guys, because it is for me, you know, and hopefully it's becoming useful for you too. So yeah, in this case, we see this rejection, right? We see that we've came down to this wick. If the euro is going to stay bullish, it's going to hopefully continue to stay above the wick there. Okay, we do got the sell side in here. We got a quarterly bullish order block, which I've had mapped out. We just basically rejected into it. I talked about this when price got above this high. I also talked about this high, this candle, drag it over, it became a bullish breaker. It's still a bullish breaker. Okay, so we're going to continue to watch that long term and try to gauge whether this is going to be just a simple retracement to go higher, or if there starts to show signs that it wants to completely reverse and start a pretty massive decline. That would be supported by the bonds going lower, similar to how lower indices would be supported by lower bonds. But because there's conversations of interest rates coming within the next couple days, we're going to have to obviously see what happens when it comes to that to determine for sure where this is going to go. Structurally, though, it's still favoring sell side until weekly areas in terms of 3PD arrays are violated, like we talked about. Okay. So yeah, that's what we're going to look at here. Again, we got the wick consequent encroachment. That should create this fair value gap in here as a balanced price range. All right, so it shouldn't have to come too deeply into that if we are going to support buy side delivery. We also have a quarterly inversion fair value gap. We also have a higher time frame high that's been traded to, through, and then back below. We also have multiple new week opening gaps. And then overall, if we're going to continue going higher, which is what my assumption is going to be until proven otherwise, we should be able to reach for this equal high up here. And then we have a weekly and a monthly fair value gap that's available too. Okay. So with this huge drop, with us starting a new month, again, we got to think of power 3. But again, what's important? This monthly high, monthly low, previous month's high and low has been triggered in on both sides. So both sides of liquidity have been purged, and we've then given this retracement, which is healthy if you're looking at this time frame on the monthly. It's a healthy retracement. Now, whether this is going to continue to stay below this and use it as a bearish order block to dig a little bit deeper, maybe even down to something like this or into something like this, we're going to have to wait and see. We got to gauge what the reaction is going to be from this area. We're moving into a time, like I said, where there's going to be very low volatility. Maybe not low volatility because every day there's a crazy headline, but it's going to be lacking news. So there's a lack of institutional sponsorship based on the economic calendar. So with that being the case, we need institutional sponsorship to get large moves to take place. So, it may be a slower period for this week, which is not this coming week, but the week after that, like 2 weeks from now. All right. So yeah, make sure you mark those levels on your chart. And then what else do we got here? I think that's pretty much it for this time frame for the currencies. Okay, again, we're still navigating within this quarterly bullish order block. So we're going to see what that wants to do moving forward. So hopefully that makes sense. So now we'll move to the weekly. Again, we got this order block here. We do see this rejection from the middle portion of it. So whether that's going to hold and continue or not, we need a little further evidence. Like price needs to break down and then try once more. Yeah, news helps you calibrate what's going to take place within Power 3 for a daily, weekly, monthly perspective. Okay, it's very important to help you navigate or frame out what the weekly profile should be. Okay, and like what days should be more impactful than others. A good example of that was last week. The start of the week all the way up till Thursday didn't have any news, like red folder wise. So when Thursday came, I explicitly said Thursday and Friday we will probably have a good move. And what do you know? Thursday, Friday came after we didn't trade on Monday, Tuesday, or Wednesday. We didn't take a trade. We were looking, but we didn't take a trade. But once we got into that area where the red folder was at within that time window on that specific day, we ended up catching buys and sells. I caught buys and sells live with my private group. Plus waiting. Now I see what my... Yeah, it's a very big thing. You know, again, waiting not only for timing, the timing aspects for execution, but also waiting for the week to get to a point where it's going to move or where the higher time frame is going to have institutional sponsorship to make the move, because that's required on the higher time frame. Waiting for that is very important. It's, you know, that's why we don't really put too much emphasis on times when there's no news. You know, when there's no news taking place, it's low probability automatically. Why? Because there's no institutional sponsorship. On those days, you also never take a trade before the New York Open or even consider it, because you then use the open price or the open of the session for your manipulation characteristics. Of course, you still got to think of Power 3 and all that, you know, within the daily range. But that's, you know, a good rule of thumb, a good rule to have. And yeah, a lot of times that simple thing can also plague you. It could cause problems. You could execute too early. You could be getting whipped out. You could be trading in days that are just not that are just not being used as important for the directional move within the week until we get to the red folder. You know, then things start to get real exciting, because that's when the timing element is going to take place for smart money, for the algorithm to deliver on the higher time frame to wherever it's trying to go overall. Right? So it's very important gem I just gave you guys. I talk about this pretty commonly, right? I talk about it all the time, at least with my private group. This is more like advanced navigation tactics, but hopefully it makes sense, because I talk about Power 3 all the time. Get caught in consolidation towards the wrong. Yeah, exactly. That right there is the exact problem that takes place if this is not understood. Yeah, and then it goes. Yeah, then it goes back in the direction that we've called on the higher time frame. Absolutely. You know. Again, just because we hop on the chart, you know, just because we hop on the chart doesn't mean we take an execution. Just because we hop on the chart doesn't mean an opportunity is there. There will be opportunities every single day. ICT has said it. I have proven that it's there every day. Does that mean that I take every single trade that I call out? No. Does it mean I consider taking every single trade every day? No. It has to have things like what I've just mentioned in alignment. A news event needs to be taking place so I can gauge the manipulation and be sure that I have institutional sponsorship. That move also needs to take place next to the news event or inside of a macro at the right time of the week. Okay? And it has to be headed towards something obvious on that higher time frame. But if you look, I could say this too. I've said it before, but people discount it. If you take your current performance and you analyze it and say you've taken losses too early and getting caught, like you said, in consolidation, manipulation, and all that, and it still goes in your direction from a higher time frame PD array that maybe you mapped out. Well, maybe as you walk forward in your development, maybe a good drill that I like to tell my students, like it's something that I learned from one of my mentors, Joe Miller, who's a elite ICT trader who manages ridiculous amounts of money for other people. But something he told me, which I think I mentioned last week as well, was if you're struggling with these issues that we've just talked about, make it an intentional drill that you do to identify higher time frame PD arrays, whether that's higher time frame highs or lows, order blocks, fair value gaps, any of these things, and let price print to those levels on the higher time frame, on the daily, on the weekly, on the monthly. And then once price hits that level that you think could be reactive on that higher time frame, then start putting emphasis on potential executions. Okay? Make that the time when you really start to lean into the possibility of an execution showing up in price or your model showing up. Use that as a baseline for your study. Okay? And then eventually, you'll be able to navigate to that PD array in a counter trend fashion, because that's something we teach here too. But then, of course, you'll be able to know how to time it, getting back in line with the overall narrative. All right? Do that study. And I'm telling you right now, you will be shocked. Study what happens when price takes highs and lows on the higher time frame, daily, weekly, monthly. Study what happens there. Does your model show up when price does that within a kill zone, within a macro? What day does it take place? Right? When it takes a liquidity pool and then reacts from it, right? What day, what news event led up to that moment that you could have used to support waiting, right, for the right move? This right here is something that took me 2 years straight to learn. I was told this by ICT and his private stuff, and I was told by some of my friends, and I just didn't accept it because I needed to take a trade. I felt like I was falling behind if I didn't execute. I'm leaving money on the table, right? And then I come to find out, as I've gained more wisdom over the last 6 years, I was just impatient. And that made it take longer, okay? Because I'd have to get out of drawdown because I was in a rush to change my life. So this drill is extremely, extremely helpful, okay? So same with the 1 to 2 trades a day rule and the drill that I tell students to do with that as well. If you don't take 1 to 2 trades, you take 5, 6, 7, 10, 30 trades a day. Start working on taking 1 or 2 trades a week or a day, per week, right? So if it's 2 trades per day that you give yourself, maximum you should only have 10 trades, preferably less. What's your percentage that you want to target per week? What do you need to do per day, or at least 2-3 times a day, or 2-3 times a week, to be able to accomplish that? If you're aiming for 10% a week, you're tripping. Okay, you've lost your fucking mind. Sorry for my French, but you've lost your mind. You could get to that point, yes, but early on, you've lost your mind. You've allowed the market to make you play by its rules. Think about this: Warren Buffett, on a yearly basis, 365 days, averages, he averages 18 to 21%, 22% a year. And you could kind of see how delusional it is for someone to think they can make 10% a week, sometimes 10% a day, as a new trader. I mean, that's a dude that's been in the market for decades, generations. Nancy Pelosi, by the way, she's one of the best stock traders somehow as an insider trader. Her percentage is still, even with insider trading, her max percentage that she's maxed out the last couple of years has been 46 to 55% a year. So again, that still slaps the face of any of those that have this opinion that they need to make 10% a day, 10% a month, or 10% a week, on a regular basis as a new trader. With what we do, we're going to be able to blow those people out the water because we have so many opportunities and it makes sense and it's very, very reliable and it's based on facts. So we have the chance to make so much more than the traditional people that trade that look at whatever they look at. But don't let that fool you. Don't make that fool you into thinking that you can do that right away or, even within the first couple of years. You know, you got to look forward ahead in time and think, okay, well, you also want to think you don't need that super extreme percentage, 10% a day, 10% a week. You don't need that to be successful. If you take $5,000 and you multiply that by, you know, 8 to 12% for like 20, 30 years by the time you retire, obviously it's not super sexy for us that want to do this full time and quit jobs and whatnot. But, you know, keeping it at a very low end, $5,000 could turn to millions of dollars within 20 years, at 8 to 12% a year, assuming that you're not adding to it, assuming that you're, you know, being very, very extra conservative. And that's a super low bar. You know, it's still admirable if you can make 10% on your portfolio a year, but it's not obviously what people like to hear, you know, because there's this fantasy world that people live in about investing when no professionals have ever taught anybody. It's only 20-year-olds trying to get you to buy their course and do a bunch of stupid shit. That's just not true, you know. That's why they never trade live. That's why they never do this, you know, because they need you to live in that bubble of, you know, fake reality. You know, they're not doing 10, 20, 30, 50% a day or a month. If you have a 100K account, you know, if you got a 100K account, you're solid. You know, 1% is $1,000. A week, that's $4,000. That's a very low bar. It's a low target. But it's extremely useful, and you can absolutely do it. Okay, so recalibrate your thinking. Let me know if you guys can hear me properly. It's saying that my streaming is possibly going to cut out. It's giving me warnings. Can you guys let me know in the chat real quick if you see everything, if things are okay? Will you just let me know real quick? But yeah, keep that stuff in mind that I just said. Hopefully you guys were able to catch that. It didn't get interrupted. Because this stuff is extremely important. You got to have the right mentor that teaches you the right way. And if you can't accept that, then trading's not for you. If that hits you in the chest and made you think, oh, this is not useful, this isn't what I want to hear, then this isn't a channel for you. This industry is not going to be for you. And, you know, it's just, that's the way it is. You know, so... Yeah, so if we move on, error is not, YouTube is not receiving. You can still hear me? Can you guys still see me? I don't know why this is doing that. It's laggy. That's irritating. What a stupid thing. We pay so much for internet. Like, we have the fastest speed. We have like overkill speeds. It's still a problem. I'm about to get Starlink. I'm sick of these fiber optic cable people. When things go wrong, it shouldn't be going wrong. We spend hundreds of dollars per month. But yeah, get Starlink, everybody. All right, well, as long as you guys can still see me, if it's a little laggy, I guess that's okay. But yeah, so keep in mind what I just mentioned. You know, obviously, again, what we do offers a whole lot more than, you know, 10% a year. I mean, that's super low bar. That's if you're just, you know, trading like maybe once a month, maybe. But it's still an admirable goal. So if you were to finish the year with 10%, that's not something for you to, you know, be upset about. If you're able to finish each week with 0.5%, that's still solid. Because 99% of people ended the week with losses. You know, ended the month with massive drawdown. You know, everybody's failing. You know, so you're a unicorn in the industry if you're succeeding. You know, it takes a special person to succeed in this because there's, you know, so many things we got to deal with. Yeah, the knowledge that I share here is priceless, honestly. You know, and I could be like everybody else, you know, that does what they do, that don't focus on trading. They focus on other things, selling, repackaged knowledge the main pillar in their their trading, versus what we do. We actually make the trading the main thing. And then if you want to join me more on a personal level, because I'm giving you my time one-on-one, which is worth a lot more than what I charge, there's that option. But trading is number one. How do you know that? I come out here live. I do it regularly. I show you guys that it works. And I don't charge an arm and a leg to work with me. And that speaks volumes versus everybody else in the industry that's trying to milk everybody for everything they have, while also not teaching them shit that makes any sense. It doesn't even work for them. I make you guys work. You got to work for it. I can't transfer everything. I can't be in your head and push the button for you and calm you down and all that. Hopefully the things I teach help you get to that point and calm yourself down and know how to think. But there's a part of this journey that I'm not going to be able to push you through. You're going to have to push yourself through. And hopefully I equipped you enough. Hopefully ICT also, has equipped you enough as well, to be able to get you to that point. And many of you guys are almost there. I got my little brother about to start attempting a funded account a little sooner than I am comfortable with, but he's doing well, and I want to see how he can manage that and see what issues may arise, if any arise at all. I think there probably will. Hopefully not, Tyler, but we'll see. One more thing too. I wanted to mention about funded accounts. I mentioned it earlier in the Discord. I can't remember if I talked about it in my free Discord, but my private group students, I mentioned that I'm going to start transitioning away from Top Step. I haven't had a bad experience, but I just noticed that they are the most restrictive, which I never realized. Like, they are the most restrictive when it comes to withdrawals, when it comes to rules, and it's just, I didn't know that my funded futures and Apex are much, much more trader friendly. Like, if Jade Cap wanted to withdraw that $2 million that he made, Top Step would not have allowed him to do it. He would have had to close his entire account to withdraw even a part of it. So, that's ridiculous. That's completely stupid. Why is that a barrier that they have? It's pathetic. It really is. It's cool if you want to just have it as, like a supplemental thing, which is kind of what I've used Top Step as, because I trade my personal account more, because I have full control over it. And what happened with me with FTMO, I don't trust any of these people. How they took my shit, stripped me of $60,000 profit, and then removed me because regulation changed. I don't trust any of these funded accounts anymore as much as I used to. But My Funded Futures, I've talked to the owner of My Funded Futures. He's very active on X, Twitter, and he's accessible, and he's an American company. So for me as an American, and any of you guys that are in America, you want to make sure you use American funded accounts, and they're number one in the industry right now. Top Step's been around longer, like FTMO has been around the longest, but My Funded Futures, Apex, they want you to succeed. They got some rules, because they got to have rules. And then you could, of course, trade live funds with pretty much every one of the funded accounts. You could be moved up as a live funded trader. Some of them, one company I heard is paying traders that prove 6 months profitability. They're literally paying them a salary, which is, it's crazy. FXCM, I think. No. I think it's FXM, I think. They're not in America, which is why I don't mess with them or have even tried. But they're literally, they're starting to pay traders. Like, you get like an $800 a month, $500 a month, depending on what level your account is. And that's a pretty good incentive. So yeah, I recommend that you guys, if you are trying to attack a funded account and you're in America, or even if you're not in, they allow you to be involved with them. Apex and My Funded Futures, they are definitely in my crosshairs. So I'm going to probably start moving I'll still trade with Top Step because I mean, it's money. What, like why not? Even if I just take like $800 to $1,000 a week from them, I mean, that's still something. It's nothing wrong with having multiple streams, right? But my main target is going to be a large funded account through my funded futures or Apex, where I can layer multiple up to 20 plus accounts, which would be really nice because then you can trade small and you could do what most of these people are doing, stacking the profits across multiple accounts, which means you can have 0.5%, 0.25% in an account, like a couple 100K accounts or 50K accounts, and you can still have that multiplied while keeping risk extremely, extremely small. That if you want to quit a job using funded accounts, that's the way to do it. Of course, this ain't financial advice and you make your own decisions, but in my opinion, that's the best way to do it. And being with Top Step, I mean, you can get 5 accounts, and if you could withdraw 500 on each or make 500 each across 5 accounts, I mean, that's a decent weekly salary that you could withdraw. I also heard that Top Step doesn't favor scalpers. I've never had a problem, but I mean, because I don't hold for 2 seconds over leveraged. Maybe that's what saved me, because I'm actually I have common sense and I know how to actually trade. Maybe that's why I haven't had a problem. But I've heard some horror stories where they're scalpers and they look down on it and they deny payouts because they don't like scalpers, which I didn't know. My funded futures and Apex are completely the opposite, along with the trader friendliness with the rules and the withdrawal limits and the fact that withdrawals don't damage or bring you into drawdown. With Top Step, if you make a withdrawal, that counts as drawdown in your max loss, which is probably the dumbest rule I've ever seen. Like, how the fuck? Like, how does that make any sense? Like, that makes 0 sense. That's just like super obviously telling you we want you to fail without saying we want you to fail. We want to disincentivize you withdrawing large amounts of money. So that's not the case with Apex. That's not the case with my funded futures, which that's the main reason why I'm going to move over to them. So I do not recommend Top Step to anybody anymore when there's my funded futures. And you can get a cheaper account, 50K accounts. I think it's like $77 with my funded futures. They got different plans depending on how good you are as a trader. There's less strict rules and there's more strict rules. There's a scaling plan where you can continue to grow the amount of withdrawals you can do at once and volume, like how many per month or per day, per week, whatever. So you got to fill it out. But those 2 are the only ones that I recommend at all. I'll probably partner with them at some point to try to help get the word out. So yeah, don't go with Top Step because it's not worth it. My funded futures is the number 1 recommendation for me. Okay, but yeah, so getting back to the analysis, I just wanted to get that out of the way because I know a lot of you want funded accounts, and I want to do my best to get you information that's very helpful. Part of that has to do with funded accounts because it's now part of the journey, especially if you don't have a lot of money, but you're here learning and seeing progress. That can really get you over the hump, So yeah, we got the order block here. Volume imbalance. You can also map this as a fair value gap from this to there. And then price rejected. Okay, so we'll see if that continues. It swept the low down here. Buy side still not fully off the table. We could see that the retracement in here just came to this, and then prices now continue to run higher. So again, we have the liquidity pools up here that I'm going to watch for the euro. I want to see if that can be targeted. So that will be my opinion. Now, if we lose this low, we'll have a fair value gap taken out. We'll have failure to get above the high up here. and then a breakdown below this, that may end up being a shift in market structure. And then if we get below this quarterly fair value gap and the wick midpoint in here, that would justify the opinion to possibly drop and go down to the sell side and stop the buy side delivery, at least for a short time. And then I would be looking for shorts in that regard. Same thing with this, right? If it breaks down below this, if we break down below this fair value gap in here, I think that'll be my line in the sand. And then depending on the reaction from this order block, that would also be something very important to watch. So yeah, we need price to displace and get above some of these levels in here, use them as support for us to get back in line with the fact that there's interest to run to the buy side. All right. So if we move on to the DXY, we see this fair value gap in here that I've been talking about. Okay, price came down into it. We're now still closing above it. If bullishness is going to continue in the indices and the currencies, it's going to have to see this get down below this weekly fair value gap. And if we were to break above this high, right, that would be a fair value gap on a weekly time frame, the order block we've been watching, which is held, and then the swing high being violated here and here. That would turn this into a type 2 dealing range. Once it gets above here, that breaks structure in my perspective, and then we'll probably look to continue going to the buy side up there. Okay, so we're inside this particular range. So depending on how this weekly fair value gap holds, that's going to be the significant determining factor. For now, though, it still seems that we're still supporting the order block, and we're still supporting the high to the low, basically continuing to sell off. Okay, sorry about the lag, you guys. I think it's because I turned it to ultra low latency, so I'm gonna have to turn that ultra low latency off on the next stream. It worked for a while. Now it's kind of playing games, so I'm sorry for that, you guys. Hopefully it's bearable. We'll get through it quick because of that. Okay, so yeah, I apologize for the lag. It's the ultra low latency. I guess I have to get a new PC or new internet or something. It shouldn't be giving me a problem for all the money I've spent on this shit. So yeah, see if I can fix that. Hopefully the latency isn't too much. Today it doesn't matter. Normally I don't turn the ultra low latency on for this because it's Sunday. We don't have much time restrictions, but yeah, during the live calls, if it's lagging right now, it's probably going to do the same thing. Hopefully not, but when we're live taking actual trades. But yeah, so were you able to catch what I just said about the DXY? Let me know in the chat if you guys caught what I said about the DXY. Because that's pretty much in a nutshell what I'm looking for. Of course, we got the weekly high and low. So if it's going to drop, use this inversion fair value gap to go lower. The first target's going to be this, then eventually it's going to be this. And then if we break outside of this, the quarterly fair value gap, which is what we targeted from this bearish breaker over here, after the market maker sell model completed, which we walked up and down. If it gets down below that, it'll be used as resistance again. Okay, so bearish DXY is what I'm going to favor until we get above these levels up here. And if we look at the indices, we have this retracement in here. Let's go to the weekly real quick. We'll fly through this because of stupid lag. Right, so we still got price going higher, right? We're at all-time highs. I'm going to continue to be bullish until proven otherwise. If it was to break down a little bit, we do got an argument for the weekly fair value gap in here on the S&P, and we got an argument for the weekly fair value gap here on the NASDAQ. Okay, we got a weekly high here previous week and previous week's low. If it was to break down below that or even target, in this case, the low, or open up, drop, and then target the high. That's in line with the buy side delivery. But then also if it declines, we also have a target for that as well if we want to counter trend trade, that being the weekly previous low. Okay, so if we go to the daily chart here, we got an order block in here that I've been watching. I used this order block to target the previous week's high on Friday. And that basically went up there, did exactly what we talked about. So again, we're watching this. We have a volume imbalance in here. Volume imbalance, we have an order block, new week opening gap, and then the swing low. If it breaks down below those here in the NASDAQ, it should be able to target the weekly low or simply these equal lows. Or a weekly fair value gap down here potentially. Or just simply target the weekly low here and each of these lows in here. We've got a weekly low there, relative equal lows. Then we've got the weekly low here. So again, if it took this and then breaks down below the volume imbalance, the order block midpoint, and the swing low, that's 3 PD arrays that would justify us potentially reaching for further sell side delivery. But yeah, so in a nutshell, that's pretty much all we have to work off of. We have this fair value gap 2 that can help justify rejection if it gets below it, and uses it as resistance as we invalidate the bullish order block on the daily. And so that may even be a setup that could set us up to target the low down here if it does support that. All right. So yeah, with that being said, guys, if you have any questions, shoot me them in the free Discord, or those of you that are on my private group, we can hop on a call if you want. If you guys are free today, just let me know. I'll be available. And yeah, you know, since there's such a pretty ridiculous lag, I don't want to keep you guys through that. So hopefully you guys got value from today. Let me know if you have any questions in the free Discord. I'd be more than happy to help you. If you're in my private group, just shoot me a DM and we can hop on a one-on-one if you need it, so we can prepare further or get any of your questions answered. I'm more than happy to do so. Okay. So yeah, God bless you guys. Appreciate you for hopping on. Don't forget to like the video, subscribe to the channel, tell your friends about this channel if you think this is a valuable place to be to get value on trading and become excellent at trading in the process. Okay. So yeah, God bless. Have a happy Sunday, and I will talk to you guys here on YouTube again on Tuesday for our weekly live call. If you want to join my private group, the links and everything are down in the description.